Hi there, in this video I will walk you through an SPX core diagonal position opened after a very extended bullish move. My name is Gery and I'm the Chief Options Expert at TanukiTrade. The idea was to create a negative delta structure with upside diagonals and downside put protection in case the market finally pulled back from the core gamma zone. The market kept grinding higher, so I had to scale and rebalance several times. When SPX finally turned lower, I closed the trade for about $1,045 profit. Let's look at the recording. Let's look at the SPX daily chart on the GEX live chart in the TanukiTrade web application. And we can see that this is a pretty overextended chart, I would say. And right now we are around the C1. And what I selected is the June 12th expiration, because this is the exact expiration I opened up the core diagonal in it. So that's why I wanted to analyze that GEX profile. Right now what we can see that the highest GEX level is at C1, this level. And I intentionally wanted to have a core diagonal way above the C2 to make it quote unquote safe. And because I was thinking about that the market might not be able to run so far very fast. So that's why I wanted to open a position where I have a core diagonal on the upside and a put vertical hedge on the downside, because if the market breaks, if something bad happens, this can fall very quickly. But we have the H-fill around below 7,200, which is pretty far from here. But who knows? And looking at the detailed volume, the upside volume is pretty strong, but there is also downside put volume activity. So there might be some kind of hedging in here. So that's why I built a position where it is negative net delta, so that if the market starts to fall, I will still make money. This is the current state of the position. I wanted to have a negative delta position with a downside buffer with this vertical hedge, and I also opened the core diagonal on the upside where the short leg is way above the C2, which is currently 7,500, and right now this is 7,570, the short leg of this. The ratio between the spreads is 1 to 4, and this is how it looks currently. This is the value of that. And if I want to hold on to this position until expiration, this will sink even further down, but I'm not intending to do that. And the worst part that we still have 5 weeks until expiration, exactly 35 days from now. And I would like to show you the screenshot of my fill from my live trader account. This was the debit spread for the core diagonal, and this is the debit spread for the put verticals. So this is kind of a slow moving position with time. So I'm not going to close this down in a couple of days. I have to still harvest data and stay in the position. The worst thing that could happen is that if the market shoots up and it goes the the short leg of the diagonals, that's the worst that could happen. But after a run like this, I assume that there is a higher probability that the market will fall, at least to HVL, and then I can still make money on the put side, but still losing money on the core diagonal. So we will see how the market unfolds from here. This is the current state. It's pretty bullish, extremely bullish, and I think it's way overextended on the upside. Let's see what the market holds, and I will continue from here. It's the 13th of May. We are on a Wednesday now, and we can see that the market is pretty bullish. The market tried to fall yesterday. You can see it in this wick candle, but the market was not succeeding in falling. And today as well, and it just keeps going up. Sometimes it will end, and it will end ugly, but right now it's still bullish. And we can see we are above HVL, we are in a positive gamma territory, and in a core gamma cluster. And we can also see that previously the C1, the highest core, was on a lower level, but still the market is pretty bullish, so that's why it migrated to 7,500 right now, which is the C1. And what else can we see on the secondary levels or secondary metrics is that there is a pretty high detailed volume on the upside. I guess this is pretty speculative, but there was a huge inflow of calls or call volume on 7600. You can also see it here on NCV and CV, because these are the core volume labels for the secondary metric, and that's why it's interesting to see these flows, and it just confirms that the market is pretty bullish. We are way above the HVL line, and that's why I wanted to adjust the position. And here you can see my current risk graph, and what I did is I wanted to buy another diagonal spread on the upside for 150, because I wanted to lower my negative delta. If the market keeps continuing higher, I wanted to have a lower negative delta, even a positive delta. So that's why I bought this diagonal 3 times. And if you look at the risk graph, I still maintained a put hedge or put protection buffer on the downside, because if the market crashes, I will make at least $120 on the downside because of this hedge. So that's why I wanted to size this new position in a way that it keeps me protected if the market goes down. And right now the market is moving up, and it's getting into my tent, the diagonal tent, but still negative delta, which will become positive with time. But it depends on how fast the market moves. If it's going to 7,600, then it will be pretty negative delta, but we will see. Here's the screenshot of my fill. I will continue from here. It's the 21st of May, and since my last recording there was a little dip in the marketplace, because last time I recorded somewhere around here. The market went up and we could only fall for 3 days, and since then the market is rebounding again. And we can see on the daily chart that we are again above the HVL and looking to target maybe the C1, the highest call on the upside, which has the highest GEX level. And also if we can zoom in, we will see that there was the highest detailed volume as well today. So it was pretty, I guess, pretty bullish. And looking at my position, I wanted to scale out a little bit from it, because who knows what will happen next. So that's why I wanted to scale out at least 1/4 of these diagonals. The closer one, this one, which had 12 contracts. So I had to close 3 contracts from it for a price of 2. And that's why I could scale out a little bit. And this was a little bit of a profit taking. And here you can see the screenshot of my fill from the live trader account. And the result became a little bit negative delta, which I don't mind, because we still have a lot of time, and with time this negative delta will become positive. And if the market goes back above 7,500, there might be a stall, which takes time, and then the market could react to it, and the delta became positive again. So I'm not worried about the negative delta. We still have a lot of time, and as you can tell from the risk graph, on the downside there is nothing to lose. On the upside I have a break even very far above 7,600. So this was the adjustment made today, and this is the current state. I will continue from here. It's the 28th of May, and I recorded my last session 1 week ago. And right now we can see that the market is again extended on the upside, and the C1, which was 7,500 previously, migrated above to 7,600. And as we can also see, the detailed volume is pretty high on the upside, because there is a peace deal pending between the US and Iran, and this has just hit the news, and everyone is really positive about it. So we will see what will happen. I have to adjust the position because it's getting very close to in the money. So that's why I wanted to rebalance the delta. And here is how it looks like right now. And this is the 2 adjustments that I did. I closed half of the original position. This was the original, and I closed half of it for $2.10. So it's doubled in price since I opened it, and I also started to scale out from the vertical hedging strategies because I still can get a little money for it. Obviously they are almost worthless because the market is moving up, but I wanted to keep some kind of hedging buffer on the downside if the market decides to turn down because something happens. And what I'm interested in is that since we are very close to have a peace deal between Iran and the US, and the market was anticipating this deal from this point on. So everybody was anticipating the deal, and the market just went up, 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 and without any stop in 9 weeks. So what will keep the market up if there is a signed peace deal? That's my question, and that's a theoretical question, but it's interesting to see what will happen then, because this can be the usual buy the rumor, sell the news situation. So we will see. I would not be surprised if after the deal is signed and everybody is happy, the market would turn down. But nobody knows, so that's why I have to manage the position and manage the risk. And that's why I wanted to have some kind of protection on the downside and scale out a little bit from the position. So this is the current state, and I will show you the screenshot from the live trader account. And I will continue from here. It's the 2nd of June and the market is still going up. We are around 50 points above than the previously recorded state. We are obviously above HVL in a core gamma zone or cluster, and the market is moving to the 7650, which is the C1, the highest core on the upside right now. So what I had to do is further scale out from the position because it was kind of negative delta, and I wanted to increase or decrease the negative delta a little bit. So what I did is scale another 1/3 of the position from here. I kept this one unchanged, and this is what I did. I closed out 1/3 of this spread, so you can see that the delta decreased a little bit or became less negative, and I could close for 170. So it's a little bit of a profit because the original one was open for 105. And here you can see the screenshot of the fill. And right now it's not very well balanced position, but if the market goes a little south, then it will make more money than currently is. Right now what we can see is it's around $500 unrealized profit. If the market decides to go down a little bit, and if you look at the chart together with analyze, if the market goes to 75.55 around this area, it can make more money. And also with data and time, if the market stays around here and these diagonals get bumped up a little bit in value. So we will see what will happen. I will continue from here. It's the 4th of June, and right now we see that the market is falling a little bit in the last 2 days on the 4-hour chart. If we go back to the daily chart, we see that there was a red candle yesterday, bouncing back from the C1, the 7600, and right now we are heading at 7500, the highest put wall on the downside. But the market is bouncing a little bit, so I decided to scale out a little more from the upper diagonal spreads because I wanted to keep the premium that is pumped into it. Here you can see my adjustment. I closed 1/3 of the position for 285, and remember I bought this for 150. So here is how it affected the whole position. And let me show you the screenshot of my fear from the trader account. This was the fear for 285 as a credit, obviously. And after the Thinkorswim is refreshed, we will see how the updated position looks like. Okay, so this is the current state. Right now I have value in both diagonals. They are almost at $3. And I still have value, a little value left in the put vertical on the downside. These are pretty out of the money, but I still keep them for protection purposes. And right now the market or the position is around flat delta, and what we can see on the hourly chart is there was a gap down today before the open. And what we can see on the 4-hourly chart, that there was a gap down and the gap was filled here. And also we tested almost the P1, the highest put, were on the downside, and we will see what the market does. If it gyrates around these two GEX levels, that would be fine for the position, because this could increase the value of the diagonals if VIX is not falling very hard, because if VIX is falling hard, it will put a pressure on the valuation of these diagonals. So we will see what will happen in the next coming days. I will continue from here. It's the 5th of June, and we can see that since yesterday the market broke down significantly. We can see also that we are right now around the P1, the highest put wall. So it's interesting to see if the market bounces back from it or not. But I wanted to close the position down, because who knows what will happen over the weekend. And this position only had 1 week until expiration, and I thought it would be much better to close it down. And here are the fears from today. When the market opened, or a little bit after the market opened, I scaled out from the upper part of the diagonals, this one, then the vertical, and finally I closed down the closer diagonals for these prices. And here you can see the screenshot of my fears. This was the first one, like an hour after the market has opened, 150 credit for the vertical spread and 280 credit for the upper diagonal. And a couple of minutes ago, this was the other diagonal sell for 310. So all in all, this position became a $1,045 profit. And there were a lot of adjustments during the trade. And if we go back and look back what would have happened if I did nothing, then I need to uncheck these boxes in here. And if you want to see what would have happened if I did nothing, this is what would have happened. If I did absolutely nothing with the position, this would be around $2,000 profit right now, because the market just turned back down after the overhyped and overstretched level. But in advance, you never know when the market will turn. So that's why it's important to scale out and manage the risk of the position. So this is what I did with all these adjustments. And I hope that you gain some insights from these adjustment ideas and how to scale out from a position like this. And all in all, it became a $1,045 profit. If you have any questions, just let me know. Thank you for your attention. Take care. Bye. Thanks for watching. If you haven't yet, please subscribe and check out our other videos. You can always find us at the links in the description. Trade safe out there.